Exxaro Resources has made a bid worth $349 million for Australian-listed African Iron. South Africa's second largest coal producer seeks exposure to African Iron's project in the Republic of Congo. Key to the outcome will be approval from African Iron's big shareholder, Equatorial Resources. Jean-Pierre, let's start with you. Now, they said that the offer has been recommended unanimously by the board of directors at African Iron in the absence of a superior proposal. Now, this begs the question, just how attractive is this offer, and should the board weigh up any other offers should they emerge?
Well, it seems to be a very good offer, substantially more than the closing price of the target. And what they also said is they'll offer a sweetener that if more than 75% of shareholders accept the offer, they'll get an extra 20 Australian cents. So I would hope that that's enough to entice all the shareholders to vote in favour. And if they do, it will be quite a nice acquisition for Exxaro.
Now, they want to obviously get exposure to the operations in the DRC, but how does this augment Exxaro's geographic strategy?
Well, what they've seen is the cash just flowing from their 20% stake in Sishen Iron Ore, and that has alerted them to the opportunity in iron ore, and they tried to get a stake in an iron ore operation that they could control. And they've been trying for more than a year now. And this operation finally gives them one that they looked at, that the price made sense and that they're happy with. So they have no geographical exposure outside of South Africa, especially when it comes to iron ore, and this will be the first foray in that regard into Central Africa.
Yonatan, let's come to you on the wall now. Now, before we get started on that share price, I couldn't help noticing that you've got another chart under the RSI. What are we looking at?
I do, Rafael. This is an indicator called the Rom indicator, relative oscillation movement. So basically what it does, it measures the elasticity of prices. How high are prices above the 200-day moving average, or how low below are prices below the 200-day moving average? The reason why we utilize the 200-day moving average is because that's pretty much the medium for a long-term scenario, for a bull market or a bear market. Bull market, remember, 200-day moving average is constantly pointing upwards, and in a bear market, it is in the opposite direction. So what this indicator does, it actually measures in certain parameters that companies have or shares prices have, how high prices get to before moving back down towards the 200-day moving average. Now, obviously, there's a lot of people talking about, well, in a bull market, all you need to do is buy the 200-day moving average, meaning that when prices are located on the 200-day moving average and the 200-day moving average is pointing upwards, that's a good area to be buying. And if it's too far extended above the 200-day moving average, it means it's time to start looking for some profits. There will be a short-term correction towards the 200-day moving average. And that's exactly what we've seen in Exxaro. We've seen a healthy correction since the third quarter of 2011 to where we are today, currently around the 173 area. We've got a very long-term rising support line, which is just slightly below the rising 200-day moving average, but this support line is now 3 years old. So it's a very, very strong support line, and prices don't seem to be wanting to break through that support line. So a very, very good sign that that prices are holding above the 170 level. And what's more is that the only thing that we've got to be looking for is this very short-term resistance level over here, which is around the 175 level. It's kind of bouncing off there and it's struggling to get past it. But I'm inclined to say that there's a higher probability for prices to move above the 175 level rather than for it to move below the 170.
Jean-Pierre, let's come to you. Exxaro is South Africa's second largest coal producer, and coal accounts for 60% of Exxaro's revenue. Now, no doubt you've seen all the articles around load shedding or potential load shedding on the part of Eskom. And if many South Africans are like me, they're probably thinking, okay, well, why go the route of acquiring an iron ore producer? Why not buy another coal producer? Yesterday on the show, we're chatting about Pan-African and how they've gone into platinum, shifting away clearly from gold. Could we say that Exxaro is going a similar move, moving away from coal now, looking at iron ore, perhaps even copper?
Well, I don't know about copper, but they're definitely trying to move into iron ore because of the economics at the moment, the high prices and the high margins for iron ore producers. They are still at their core a coal miner, and the Grootgeluk mine will start giving coal to the Medupi station this year, but very small amounts because it will only be in 2014 and 15 that will ramp up. That Medupi will really take the bulk of that coal. So the coal that they sell to Eskom might be most of their revenue, but it's a very small margin. And that is because they are diversifying into other types of minerals like iron ore, which might not on a revenue basis be a big contributor to their revenues, but on a profit contribution, it will make a significant difference to Exxaro.
Now, Yonatan's been chatting to us about that very bullish trend on the share price. Could you give us a sense of the forward valuations of Exxaro?
Well, with any commodity company, and especially in the case of Exxaro, one needs to have a view of the price of the commodity that they sell. In this case, iron ore and coal. And those two commodities have done extremely well if you look at their prices over the last decade. And even over the last 2 years, since 2008, 2009, when we had a bit of a crash, based on China continuing their growth. So for these prices to continue to be high, one needs China to continue growing. And that's where the question mark is. Will China slow down or will they continue growing? And if they do continue to grow, they import iron ore for the use and the production of steel. They import coal together with India for their own coal-powered power stations. Then these commodity prices could stay high, and that will be very beneficial for Exxaro. It's a big but, and I would say that the probability at this stage is quite balanced whether these commodity prices will stay high or not. So I'm somewhat on the fence when it comes to Exxaro, unfortunately.
Well, someone who isn't on the fence is Yonatan. He's clearly very bullish on the share. Now, we saw a correction during the third quarter of 2011, and that's obviously attracted more buyers. Are we likely to see such appetite continuing for the remainder of 2012?
I think so. I think that the 200-day moving average is a good gauge, and it's continued to rise. We don't want to buck the trend. We want to continue with the trend, and the trend is clearly up. This ROM indicator that I gave it a brief explanation to, it is sitting very much in the buy zone territory. The RSI has broken through its resistance level, suggesting that prices should break through its corresponding resistance level, which is the 175. So I'm bullish on Exxaro.
And bullish is a nice way of saying hot stock, right?
Hot stock.
Right, let's come to Jean-Pierre's vote. Hot or not for you, Exxaro?
Lukewarm, unfortunately. But I can tell you it will be hot if commodities prices stay where they are at the moment.
Lukewarm for Jean-Pierre, but hot if commodity prices stay where they are. Let's move on to Sasol now. Sasol Germany, a subsidiary of South African petrochemicals group Sasol, has reached an agreement to sell its Witten production site and its associated oleochemicals business to Hamburg-based Kremer Oleo. The companies did not disclose the value of the transaction, and the deal is awaiting approval from competition authorities. So, Jean-Pierre, really not much to say about this deal and what's going to be happening, but you know how they say every day you learn something new. Today I learned the word oleochemicals. I had to Google it, pull up a dictionary. What is it? What is it all about?
Well, I'm not an engineer. I'm an accountant of profession. So unfortunately, we feel where I won't be able to answer that question for you. What I can say is that chemicals are becoming increasingly important for Sasol. They've really bulked up their chemical business in Europe, in South Africa, around the world, and tried to diversify somewhat away from their liquid fuels business. So between oleochemicals, between polychemicals, and between all kinds of ethylenes, they're definitely bulking up those operations.
Well, all I know about oleochemicals is that they put it in food and cosmetics and drugs. It's got all sorts of weird and wonderful uses.
And it smells nice as well.
Apparently so, too. Now, we're just coming out of the COP17 summit that was held here in South Africa, and South African government moving towards, obviously, a greener economy. Give us your take on the carbon tax, the proposed carbon tax, and how that's likely to impact the likes of Sasol.
This is a real risk for Sasol. The biggest emitter locally is Eskom, but in our private sector, it is Sasol. And because their fuel is based on a coal technology, which they then convert to liquids, to fuel that we use and put in our cars, it means that they do emit a lot of CO2. And if this tax does come to fruition and is imposed on Sasol, it could be materially detrimental to their financial situation. So where they are now to where they need to be before the tax is mitigated is quite a long while, and they need to do a lot and invest a lot into green energy to try and offset the carbon that they do emit at the moment.
Now, we saw last week how MTN Group's share price was knocked by the political uncertainty in Nigeria and Iran losing 8% in 2 days last week. And Sasol itself has entered talks to potentially divest from its operations in Iran. What is the likelihood of the probability of sanctions being imposed by Sasol given their investments in Iran, and are they really going to divest from those operations?
Well, at the moment, they are not seen as a connected party to a US investor, to a US domiciled company, and therefore, at the moment, there are no restrictions on them.
Even though they're listed in New York?
Correct, yes,
okay.
Because they are still domiciled in South Africa. If that should change and the sanctions are extended to be imposed on Sasol as well, they will probably need to divest from those Iranian operations. It's operations that could be worth up to 10 billion rand. This is now with Sasol having a market cap of 250 billion rand. So we're talking about 4% of the market cap. And the question is, what will they get for that asset? Because if they are a forced seller, they might not get 10 billion, they might get significantly less.
Let's come to Yonatan now on the wall. Now, since August 2011, Sasol's had a really, really nice looking uptrend. Take us through the charts.
Yeah, it certainly has. And I actually remember being on the show in October of 2011, and we suggested that Sasol was a hot stock, and we had the 380 as a target, which it has clearly taken out at this particular point in time. But I like the continuation of this chart. I think that Sasol will continue to continue with its uptrend, the range or the parallel uptrend that is trading between at the moment is a 385 support level and a 425 resistance level. Again, the 200-day moving average, although flattening out August, September, October time, but it's starting to pick back up again now, which should suggest that the prices should continue to move on the upside.
What makes you say that the prices could move on the upside?
Good question. The reason I believe it, and the reason I think there's a higher probability whenever we're talking stocks and technical analysts or even fundamentalists, we're talking about probabilities. Nothing's a guarantee. So what I say is that there's a higher probability for prices to hit the 425 rather than hitting rather than breaking through the 385 is this leading indicator over here, relative strength index, the RSI. Now, what we can see is that we've seen a divergence of prices taking place with higher highs in the prices and lower highs in the oscillator. But what has happened now is that the oscillator has actually broken through its resistance level, which is a leading sign for prices to continue moving up into the 425 area.
Jean-Pierre, let's come to Sasol's operations in Africa. They built a 1 billion rand cobalt catalytic plant, and they plan to spend 40 billion rand on growth projects. What is the scope for their plans beyond South Africa?
Well, they've got big plans in Mozambique with gas exposure there and wanting to expand that, and then also the gas in the northern US, which they also bought. They've spent 14 billion rand on those acquisitions. So geographically they are expanding, and also in their product mix they are expanding more into natural gas. And it's been an interesting one because the price of natural gas has plummeted in the last few months because the winter in the US hasn't been as cold as what was expected. So unfortunately for Sasol, they've expanded into natural gas at exactly the wrong time, paid top dollar, and now these prices have come down. So the big question is, after we have this hangover being sorted out of very high inventories of natural gas in the US, will the prices normalize, tick up again, and could those fracking operations, the natural gas operations in the US, become really viable for them again?
Well, speaking about natural gas fracking, they decided against exploring shale gas in the Karoo Basin, and they say that this is likely to impact the livelihoods and the health of people in that area. It's going to be compromised, and they also think that is something that's going to deter the likes of Royal Dutch Shell from exploring in the area. What's your comment on that?
It is quite a contentious issue at the moment, and fracking is allowed in the US, and it has been for a number of years. And it seems like, as you say, the moratorium means that we are taking a bit of a more scrutinous view in South Africa on it. And I think it's probably the right view from an environmental basis, from a balanced development basis, to say, let's first give the Americans some time to really develop it and see what the risks are, because there are cases out there that have shown that there is a mixture of whatever they loosen up underneath the ground and gets into the drinking water and the water table. So it's a wait and see approach, and I think it is prudent to take that approach because we don't want to do anything locally that could affect other areas of our Karoo Basin, which is very fragile.
Well, time to vote now for Sasol. Jean-Pierre, let's start with you. Hot or not?
Well, a few months ago, Sasol was trading at just above 300 Rand. I thought it was hot then. At closer to 400 Rand, I think it's closer to fair value. I'm on the fence again, but if I had to choose, I would say that it is hot because of the upside risk to oil prices.
Hot because of the upside risk to the oil price, and that target of 385 to 425 obviously still looking quite hot too. Yonatan, your vote for Sasol?
Yeah, absolutely. I still think I'm bullish. From a risk-reward ratio for traders, there's a lot less risk on the downside, a lot more reward on the upside. So I continue to be hot on Sasol.